and make it 1 o'clock. So I think we'll kick off just in the interest of getting getting through everything that we need to do today. So first of all, thank you everybody for joining us today. A little bit of housekeeping before we start. You are all in listen-only mode at the moment. If you want to ask any of us, either Paul or myself, I'll introduce Paul in a few minutes. If you want to ask either of us a question, if you just pop it in the chat box, we'll take regular breaks and come back to the questions that people are asking as we go through the call today. Now, the content for today, we've got a lot to cover. We're going to talk about furloughing staff, we're going to talk about grants, we're going to talk about HMRC and the payment options, etc. with HMRC. We're also going to talk about financing through the banks and this scheme that the banks, or the British Business Bank, has announced in terms of support packages for small businesses. And that's why Paul's here today, because Paul is an expert in lending, having been for many years. I'm not going to, Paul also has to be on another call at 2 o'clock, and I'm sure he's going to get lots and lots of questions from you guys. So we're going to cover off the stuff that Paul's going to go through first, and then we'll move on to talking about the other things in the second half of the call. So first of all, Paul, do you want to say hello to everybody and just tell everybody who you are and a little bit about yourself?
Yeah, good afternoon, everybody. Thanks, Stuart, for the invitation this afternoon. It's great to join you in very difficult and unprecedented times. My name's Paul Grace. I'm a director of Red Sky Corporate Services Limited, which is a commercial finance brokerage. I've been involved in that business for the last 3 months, having previously worked in banking for 24 years. So all my career was with Yorkshire Bank in a number of roles ranging from relationship management, business development, working on the dark side in credit underwriting, and latterly running the bank in Leeds and Central Yorkshire. So that's a very quick introduction from me, Stuart. Thank you.
So you know a fair bit about lending money?
Allegedly, but I didn't get found out after 24 years, so hopefully that's a decent start.
So the scheme that was announced last week and launched yesterday, tell us just a little bit about the framework. How does it work?
Well, I guess the scheme is it follows on from something called the Enterprise Finance Guarantee Scheme, which has been around for the last 10, 11 years. Over that time, I think something in the region of £3.3 billion worth got lent through the Enterprise Finance Guarantee Scheme, something like 35,000 applications. So obviously that's sort of morphed into the new Corona Business Interruption Loan Scheme. So it's very similar to the old EFG scheme. I guess key features, which I'm sure everybody will have seen, is that I think the pot is 330 billion to start off with, but that will go up if it needs to. Individual applications up to £5 million of funding. A loan guarantee from the government of 80%, but that might be something to talk about and look at in a little more detail later on, because there is some small print around that. Pretty attractive finance terms in terms of, I think some of the banks will be doing no arrangement fees for the loans, and also the government will be paying the interest in the first 12 months, along with a guarantee fee, which under the old EFG scheme, the SME or the borrower would have paid, but the government's paying for it in this scheme. And finance available for up to 6 years, depending on the product that you want to choose, whether it's a loan, an overdraft asset finance, or invoice finance. So a scheme which will hopefully have a lot of benefit out there to the SMEs and the business communities, subject to hopefully the banks sorting themselves out. And I think as well, something we can probably come back and talk about is it may well take the banks few days or a week or so to get their head around this scheme. It's been introduced at very, very short notice.
Let's pick up on a few points that you just mentioned there, actually, Paul. So can we start with this 80% guarantee?
Yes.
I think some people are a little bit confused as to what that really means.
Yeah, so I'll try and explain it in as simple terms as I can, which isn't always easy for me. So the headline is an 80% guarantee. So if you look at the headline, and assume you're borrowing 100,000, then you would think the government is guaranteeing 80,000 of that, which isn't in fact actually the case. So however much you borrow, you will be liable for that amount. And in a worst case doomsday scenario, assuming you default on that loan, you will then be held fully liable for that amount. The bank will look to claw that 100,000 back from you, and it's only the shortfall that the government will then put that 80% to. So again, let's just, if you borrowed 100,000, you managed to pay 50 of it back, for example, but then defaulted on it, the government guarantee would be 80% of the 50,000 remaining balance, rather than that 80% of the facility that you originally borrowed.
I think that's really important to understand, because that's probably not what people are understanding. Yeah.
No, I think the headline is the government will guarantee 80% of the original loan amount or facility amount. It's actually 80% of the loan balance that's left, or if you default, whatever loan balance is left after the bank's taken any security or any collect out under a personal guarantee or anything like that, Stuart.
Okay. So just some things that I've had questions about, just clearing up. These are probably very, very quick answers. First question was, what are setup costs? I'm guessing that they are nil. Is that right?
Yeah, I think the headlines that came out from the guaranteed scheme would be that, I don't know if I can just find it. Some lenders indicated that they would not charge arrangement fees or early repayment charges. I suspect what you'll find is that most banks won't charge an arrangement fee, but I think that will be on a case-by-case, bank-by-bank basis, and therefore I think it's worth checking with your own individual bank what their parameters and rules are, because what I'm seeing is different banks are approaching this scheme in different ways, which is good from an innovation point of view, but from a uniformity point of view, you might have 6 banks all offering 6 different things, which isn't ideal.
Well, I think as we discovered this morning as well, the same bank were giving 2 different messages. They gave me one and you a slightly different one.
Yeah, and this is one of the hand grenades to let off, because the government has marketed this around, personal guarantees won't be taken, especially in the £250,000 and below lending facilities, whereas I'm starting to see things from banks that are looking for personal guarantees on all of these facilities. And again, I think that will probably sort itself out over the next week or 2 as we really get into the loan and get the scheme up and running. But I think there's a bit of confusion on the bank side as well, because this has obviously come out at the back end of last week and over the weekend. So the banks are still putting their house in order and sort of formalising their scheme rules and what they're going to look to do.
Okay, so we can, before we fly in and start applying for finance, which is sometimes very, very tempting when the government puts out an offer like that, and you've helped clarify a couple of the pitfalls. Before flying straight in and applying, what should we have ready to give to the bank when they, presumably this is not just somebody sat there and all we have to do is ring them up and they'll give us a bag full of cash. There's going to be a process to this, isn't there? And I suspect it's very similar to a normal process.
Yeah. So under the old scheme, I think you need to get your house in order, as you've already said, Stuart. So what does that look like? 3 years historical accounts, getting them ready, getting any management accounts that you've got. If it's one of your to-do lists to get last month or last quarter's management accounts done, then I would certainly get that done as quickly as possible. Under the old EFG scheme, what you needed to do was provide 2 years integrated projections, which was profit and loss account, balance sheet, and cash flow forecast. That's quite a lot of work, and I think the system could collapse and get inundated if everybody had to provide 2 years worth of projections. So I've chatted to a few banks over the last 48 hours, and they're taking quite a practical approach to this. So if you're going to approach them for £1 million loan, then they might want to see those 2 years worth of projections because one of the key considerations is if you had a viable business before, obviously CV19, they want to make sure you've got a viable business after it and you can pay that loan back. But if you're going in for, I don't know, a £10,000–20,000 loan, something like that, I'm not going to say the bank's going to rubber stamp that, but I don't think they'll look for 2 years worth of projections. They might just want to understand why is 20,000 the right amount? How long is that £20,000 going to last you for? Excuse me. Is it going to see you 3 months? Is it going to see you 6 months? Is it going to see you 12 months? And probably what I would suggest is I'd suggest being ultra cautious. So if you think this is going to go on for 3 months, double it up 6 months, because the last thing you want to be doing is going back to the bank in 3 months' time, because they might then start thinking, well, you got this wrong first time, so you're going to be back in another 3 months asking for another 20 or 30,000 pounds, whatever that might be. So I'd be cautious. I wouldn't be afraid to put contingency amounts in there, and and just tell the bank what you're doing, and they'll understand that. I think the other thing as well, which you want to do, is actually work out how you want to borrow the funds. So we touched on, I guess, the four mechanisms that the loan scheme covers, which is term loan, overdraft, invoice finance, and asset finance. My personal, and this is where the scheme name doesn't help itself, because it's called the loan scheme. Now, any loan you have to pay back. Now, that might sound really stating the obvious, which I've got a great habit of doing. But if you've got a capital repayment holiday of, say, 12 months, in month 13, you're going to start have to pay capital. So if you're borrowing 100,000, actually no, let's make this nice and easy. If you're borrowing 60,000 over 6 years, then you're going to have to pay £10,000 of capital back per annum. So straight into year 2, those capital repayments are going to come out of your cash flow. So again, I would be telling everybody to try and borrow on an overdraft. Overdrafts are for working capital. You know, they fund your debtors, your stock, your creditor payments, your salary payments, whatever that might be. So effectively, an overdraft funds your working capital. So fund on overdraft in the first instance, because you will only get charged the interest, and the government are going to give you 12 months worth of interest for free. So effectively, you're going to be paying nothing for that debt in the first 12 months of this loan. Whereas, if a particular bank gives you a 6-month capital repayment holiday, you're going to have to start paying that capital back in month 7, and that's going to eat into your cash flow. So I would say only borrow on a term loan or asset finance arrangement if you're buying a fixed asset and you need to finance that over a longer period of time. I can't quite get my head around why you'd be wanting to buy fixed assets at this moment in time, given what's going on. I think the borrowing requirements are very much in the short term. So look at an overdraft. Invoice finance is also very good, because if you've got a debtor book of 100,000, for example, the bank might give you a cash advance of 80,000 tomorrow against that debtor book. Again, it'll release a lot of cash straight away for you. The catch with invoice finance is that if you think your sales are going to fall away over the next 3, 6, 9, 12 months, as I would suggest, probably likely, your debtor book's going to go down. So as you collect your debtors in, that's going to be paying that invoice finance loan facility back. You're not going to have the sales to convert into debtors to raise new debt against those invoices. So actually, while invoice finance might be great in month 1 to release a chunk of cash flow, over 12 months, if you're not generating the same levels of sales, it might be cash negative for you over those 12 months. So for me, overdraft is the way to initially approach your bank.
Okay, and the overdrafts are included within this scheme, aren't they?
They are. Overdrafts and invoice finance are available for up to 3 years. Term loans and asset finance are available and guaranteed for up to 6 years. And you might have a double approach to this. So you might initially take it on an overdraft, and then in 2 or 3 years' time, hopefully, when we're back in business as usual, you may then look to put it on a loan and pay it back. But all 4 of those things are covered under the loan scheme.
Okay, cool. Have we got any questions coming in here for Paul? We've got one from Rob. I think this is going back to the guarantee. So it said that, so they'll come after your house before they go to the government. I don't think that's not quite right, is it?
No, it's not. So I think there's two things to talk about in that question. First is should personal guarantees be taken under this scheme? And I think there's a little bit of confusion around that, and that'll work its way through over the next few days. I've seen various MPs on Twitter saying that under no circumstances should banks be taking personal guarantees. But as you've seen this morning, Stuart, you've seen that email from the bank who are looking for personal guarantees. However, if the bank do look to take a personal guarantee, then they are not allowed to secure your PPR, your private principal residence. So you are not allowed to put your house up as tangible security to support that guarantee. I guess you could take it to the extreme and say that if you do provide a guarantee and you're not able to settle that personal guarantee amount, then you might have to sell your house to meet that liability. But that house cannot be used to support the personal guarantee. And I think it would be really poor form of the banks. This is black banks, repossessing properties in 3 to 5 years' time to repay these sorts of facilities. Again, I talked to a banker this morning actually, and it was a credit person within a bank, and that bank isn't looking for personal guarantees at this point in time. They're simply saying, well, we'll go with that risk, whatever that shortfall is, because the business was viable pre-COVID-19. It's going to be viable post-COVID-19. So, PGs, I think, is one to watch, and I think it'll wash through over the next week or two. But the bank should not be asking you to secure that personal guarantee with your house.
Yeah, I think it's probably worth pointing out that whilst the headlines have come from the government and the British Business Bank, the reality is that these loans are being pushed out through individual banks who have individual criteria and their interpretation of things. Therefore, it could be different depending on who you talk to, couldn't it?
Correct, yeah. And they've also, got several inches thick of paperwork to work through. And, it's theory versus practice, isn't it? So theory says one thing, but until you actually get into the practical scheme of things, then you don't really know. I think one thing we haven't really covered off, Stuart, is there is a means testing around these loan facilities. So when you look at the scheme rules, you've got up to 250,000, which the banks can offer on an unsecured basis. Now, unsecured again has various definitions. So I suspect the bank will always want a debenture as security, and potentially that personal guarantee that we've talked about. For loans over 250,000, the lender must establish a lack of absence of security prior to offering the business the loan scheme. So, they will, I think the banks will look for obviously more security the bigger the loan becomes. And I think the other thing which could potentially trip the banks up in the short term until they've worked through it is if a lender can offer finance on normal commercial terms, it's obliged to do so prior to using the scheme. So if you try and hide security, shall we call it, away from the banks to try and capitalise on the scheme, then the banks will come looking for that security, so to speak, in advance of the loan guarantee scheme.
So if your house can't be used as security, what sort of security are we talking about for people? What would the banks looking at to secure the loan against?
Well, I think you've got I guess it depends on the varied stage of your business. So if you are a young and emerging business, they'll probably take, an unsecured personal guarantee, so to speak. If you're a mature business with a turnover of several £1 million, you might have an owner-occupier commercial warehouse or commercial office block that you operate from. If you have a 50% loan to value on that loan to the property value, then the bank can gear up against that property and provide funding under that commercial mortgage rather than using the scheme. If you've got 75-80% loan to value on that commercial office or factory or warehouse, whatever that might be, the bank hasn't got any asset value to gear up or leverage against, so that's where the scheme might then kick in. But I would say for the smaller loans, through a limited company, a bank will almost certainly look for a debenture, and depending on how the scheme washes through, some sort of personal guarantee, whether they are allowed or not. And I know it's not great for me to come on a call and sit on the fence and not swing down either way, but we're seeing mixed messages from the bank in terms of those PGs at this moment in time.
Absolutely. So we've got can second homes be used as security? I think somebody's asking there.
Yeah, I suspect they probably can be. So that would probably be one for each individual bank and dependent on their credit policy. I guess one of the problems people might have in actually providing tangible security is, for a bank to take a legal charge over a property, they've got to get it valued. Well, valuers are in lockdown now, like the rest of us. You've then got to get the legal instructions to solicitors. You're then relying on the land registry, things like that. So something which may have taken 6 to 8 weeks in the past might take double that period of time now. So, and obviously businesses can't wait that long. So I think in all the conversations, it should be around how you can access this money as quickly as possible through a debenture and if they want it, an unsupported personal guarantee.
Okay. So any idea how long loans take to approve? And the second question from the same person, from Steve, is if we already have a loan agreed, should we take it? I think go on, answer the first one.
Yeah. So how long should it take? So a couple of things. Go talk to your existing bank straight away. Some of the banks are actually closed for these new loan applications. So unless you're an existing customer of that bank, you can't go anywhere else. So if you're a customer of Barclays per se, go and talk to Barclays, because existing customers are being prioritised so talk to your existing bank. And if you've already got a loan, ask them for a capital repayment holiday. You've already seen that wash through in terms of residential mortgages. So, most banks, I suspect, will give you a capital repayment holiday. In terms of how long these loans take to get approved, I think this is going to be one of the problems. Because if you think in the last 10 years, the banks have done 3 billion of this lending, and they've now put a lot of 330 billion. Everybody will be able to do the maths on that. And this isn't going to prove a popular comment, but bankers don't like these types of loans because they're very paperwork intensive. The banks have certain caps in place that they'll need to talk to the business bank around not exceeding, because each guarantee to each bank will be capped. So it could become a bit of a paperwork nightmare, and it could be a bit of the funnel effect where everything's going in at the top and not a lot coming out the bottom. Most banks are driving people to their websites. So again, I personally don't think it's ideal that you can not talk to a human being about this and you have to apply over the internet or through a call centre. Having said that, if that gives speed of service and that gets people's funding through a lot quicker, then that's absolutely the best way. In the old world, an enterprise finance guaranteed scheme would probably take 6 to 8 weeks from application to somebody receiving funds in their account. If that happens here, this scheme's going to fall apart. So something's got to change. I have every confidence that the banks will change that and the banks will get it right. My only caveat to that is, and everyone will have seen this, a lot of bankers have disappeared off the high streets over the last few years and have driven people to call centres or web-based applications. But I'd say the website is the initial point of call. Santander, I'll name check Santander. You can apply for a overdraft on Santander's website, but you can only apply between 500 and 25,000. So if you need something outside of that, then you're talking to a call centre or something else. So check the website out rather than heading into a call centre for an hour to wait to speak.
Perfect. We've got here a couple of questions around, well, a couple of slightly different questions. So one person's asking if they've already got loans that are on probably worse terms than what's been offered now. Is it worth considering consolidation? So I think they're thinking here, if we've already got a commercial loan that's going to run for a couple of years still, would it be worth paying that loan off, taking one of these loans out, where they're going to get 12 months interest free, which is going to help their cash flow, and maybe it might even be at a better rate. Is that something that we can do with this? And is that an option?
I think on a like-for-like basis, probably not. I think if you needed to borrow additional money, then you could probably do that. So if you had 50,000 outstanding on a loan but needed to borrow another 100, so you might be able to apply in this scheme for 150 to repay the old loan. And again, that's something which could help your cash flow as well, because if you've got 2 years left to run on that loan and you're paying £25,000 back per annum, but you then reschedule that over to 6 years, the capital, those capital repayments will reduce, improving your cash flow. But I think on a like-for-like basis, I think you might get put to the back of the queue on that, because the banks will want to prioritise funding applications which are going to stop businesses going out of business.
Yeah, absolutely. Question here. My business is only 8 months old. Would I still be eligible to apply for an overdraft while not having a year's accounts? And also, I don't have an overdraft at the moment.
Yeah. I think that's a toughie, in all honesty, because you're going to have to prove to the banks that you had a viable business pre-COVID-19 to qualify for this loan. But again, sitting on the thorny fence, this is exactly the sort of scheme that's been set up to help companies like that who've been trading 8 months. So I guess I'd say to that company, apply. If you've got management accounts, then obviously get them up to date. I think if those management accounts are showing a loss, then that could be difficult, because effectively you're losing money before COVID-19. In that scenario, are you a viable business post if you were losing money beforehand? So that could be a bit difficult. But for me, unless you've got to ask a question. You don't ask a question, you're never going to know. And it is here to support people through the crisis and provide them with much needed working capital to keep them in business. So I think you've got to ask the question. I guess the other thing to probably throw in here is, I'll throw away comment, if I may, first of all. There are 40 banks who are signed up to this scheme. So go away and check your bank is signed up to the scheme. Now, there's only one bank that I've seen who aren't signed up to the scheme that could cause businesses potential problems, and that's Handelsbanken. The Handelsbanken aren't in the scheme, so they're not offering coronavirus loan schemes at this moment in time. Now, that might change. They are talking to the government about it, but dare I say it, Handelsbanken don't make decisions quickly. So I don't expect that to change in the next 24, 48 hours. I guess the other thing that people might want to consider is you can raise finance elsewhere. So, we work with a lot of small businesses, young and emerging businesses who borrow from peer-to-peer lenders such as Funding Circle. Now, the challenges around that are it'll probably cost you more money from an interest rate perspective, and they will look for a personal guarantee, where this scheme may or may not look for a personal guarantee. The likes of Funding Circle and other peer-to-peer lenders will look for a personal guarantee. So again, it's how confident you are around your business, because obviously if it doesn't survive in the long term, those funders and banks will look to sort of claw that personal guarantee back from you and the liability that you've signed up for that. So like I say, we work with about 153 funders. So we've got sort of the whole of range that we can go off and talk to, ranging from high street banks to peer-to-peer funders such as Funding Circle. So if you can't get funding through the traditional methods, then there are ways and means, but they also have their disadvantages as well.
Yeah, I guess the flip side of those non-traditional means are sometimes they're a bit quicker as well. So yeah, you pay more and you got the PG, but if we are desperate and we need the cash very quickly, they're quite good at turning things around quickly, aren't they?
Yeah, so we work with two in particular, and one is a fintech, and they have had funds in the same day as we put applications through, so they can get funds the same day. Funding Circle, I think, are coming under a little bit of pressure. If you've not checked their share price out, you might want to go have a look at their share price over the last sort of month or so. And I actually got an email from Funding Circle this morning. So if you just bear with me, I'm just going to flick off screen to just quickly just get it, because they're revising their criteria all the time. So Funding Circle have reduced their maximum loan to 200,000. Client has now got 14 days to accept the loan offer, which has come down from 30 days. Loans may take up to 2 weeks to fund once approved. So again, Funding Circle, where they might have got funds into your account in a few days, they're now sort of taking 2 weeks. And again, that's something that people might want to consider on the call. I know it's going to cost people more, but they may, if they're thinking of applying for a Corona business interruption loan scheme loan of 100,000, and they know they need 50 in the short term, then you might want to raise 50 through a peer-to-peer lender to keep you going, and then pay it back once you've got the new loan scheme of 100 in place. Now there could be an early repayment charge associated with that. There's probably a bit more interest cost, but there isn't I don't think there's a one size fits all in this. It's all down to individual circumstances, individual cash flows, how quickly you need the money, and sort of what your appetite is around personal guarantees, interest rates, all those sorts of things.
So another question we've got here: is it worth asking Funding Circle for a repayment break on existing loans? I think you've already said yes, haven't you?
Well, I have with traditional banks, but on peer-to-peers, it's slightly more difficult. So again, I'm just flicking into my emails from this morning.
I do know we have had somebody who's asked Funding Circle previously, and they've been really good with them. But
so again, if you don't ask, you don't get. So let me just find the loan, and again, Stuart, I can flick it on to you after. But if you email customersolutions@fundingcircle.com, customersolutions@fundingcircle.com, they're doing it on a case-by-case basis until they've finalised their policy. So again, they're seeing a huge influx of calls. So if you send an email with the business name as the subject line, and explain in the email as clearly and simply as the position that you're in, what you're trying to achieve, any timescales, the team will look at it on a sort of best case scenario. So again, I'll flick that email to you on after we've come off the call, so you can do that to your customers.
Yeah, I'll share it later on this afternoon. We're going to record. This is recording, so we'll share the recording later on, and we'll put the email and bits and pieces like that in it. I think last question, Paul. I'm going to give your voice a break. The last question. I don't know if you'll know the answer to this one or not, but I work in the travel industry, which we were the first hit with not being able to work, and we're likely to be the last back up and running. As travel restrictions are probably going to be the last thing that's lifted. Do you think banks are likely to look at this type of business for loans?
Short answer to that is yes. But if I'm putting my banking hat on, a bank makes a loan on the basis it's going to get repaid. So it looks at credit criteria on a case-by-case basis. So if you're the first impacted and you're the last out of it, then I'd probably expect the bank's underwriting criteria to be as probably slightly more rigorous than otherwise seen. Again, this is what the loan scheme is designed to do. It's here to support businesses. So I'd just encourage you to go off and talk to your existing bank and have a chat with them. The weaker your cash flow is, the more security the banks are going to want to take, and vice versa. The stronger your cash flow is, the less security the banks are going to take. So in that scenario where you're almost first into the recession or first into a bad situation and you're last out, the banks are probably going to want more security in that example. But again, if you go back to the scheme criteria, if you had a valid business or a viable business pre-COVID-19, the spirit of this scheme is that you will have a viable business post, and therefore you qualify under this scheme. So you should go off and investigate and try and secure that loan facility.
Yeah, and again, going back to what you said earlier, if you don't ask, you don't get.
Correct. Yep. I think the systems will get log jammed in the first few days. When I was chatting to one of the credit teams earlier today, they've not seen one application yet, but on the basis it launched yesterday, they're expecting to see an avalanche of cases towards the end of this week when the relationship managers have done the paperwork and put the credit submissions in. So, I'd encourage everybody to be as proactive as possible and to try and get to the front of the queue.
And very, very last question, I'll sneak one more in.
Go for it.
Which was, do we know if requests for holiday payments on Funding Circle will get flagged on our credit score?
I don't, off the top of my head. I can find out and come back to you. I think it's really harsh if that's going to happen, because the whole world is going into a credit repayment holiday. So I would very much hope that would not impact anybody's credit rating, but I'll go away and ask the question and come back to you.
Okay, thank you. Right, I'm going to give you a rest now, Paul. I think we've run out of questions. You're more than welcome to hang around if you want to listen to the rest of this. I know you've got to be away to another call, so I won't be offended at some point if your picture disappears from the screen.
No, I'll maybe hang on for 10 minutes if that's okay.
I've had a couple of people message me to say thank you very, very much. That's been absolutely brilliant. You've been a massive help, massive support. Great info, thanks, Paul. Message here which says they didn't know you were called Paul, but please give him our thanks. It's been brilliant. So thank you ever so much for that, Paul. You've been really helpful. And will you share your? Can people get in touch with you if they need any more support?
Yeah, fine. So I'm just looking around for one of my business cards.
I've put you on the spot there, haven't I?
Yeah. No, so listen, I'm in business to lend money. That's how I make money. Sorry, I apologise. So my mobile phone number is 07854 119 277. That's 07854 119 277. Or my email address is paul@red-sky.co.uk. So I think I pinged you a sort of fact sheet on the loan scheme earlier on today. So all my contact details are on that. So if anybody wants a brief summary of what we've gone through today, then I'm sure Stuart's going to happily send you that fact sheet. It's got my contact details.
Yeah, I'll share your contact details and everything, Paul. So
great
a few more thanks. Steve, Chris, Ahid, Brian, all saying thank you. So cheers, Paul.